What you're looking at now is a simple income statement for a government contractor. Each line on this income statement is a summary made up of the totals of individual general ledger accounts. Under the category of direct costs, we have direct labor and direct non-labor. In the detail of each line, we'd be able to see a list of general ledger accounts showing what contracts were charged and the type of cost. Within each general ledger account, we'd be able to see individual transactions and amounts. Let's talk about the line called direct labor. Direct labor is the actual cost of the work performed by employees on direct or contract work. We'd get the direct labor cost by looking at their timesheets, which would have a charge number for each contract with the hours worked. The direct labor cost would be the hours charged to a contract times the employee's pay rate. Now let's talk about the line called direct non-labor. Direct non-labor would be made up of direct travel, materials, subcontract costs, consultants, and other direct costs charged to contracts. If the amount shown were for all direct travel, we'd be able to find the detail of that cost by looking at the billable cost to specific contracts based on travel expense reports. The total for direct costs is the sum of the two amounts, direct labor plus non-labor. The reason we have to identify these two costs separately is that there will be calculations we do that are based only on the direct labor amounts. This leads us into our next line called fringe. There's a relationship between direct labor and fringe. Every time we hire a new engineer, we're also committing to associated costs called fringe or fringe benefits. We're going to be paying the engineer's salary, but we'll also have costs for payroll taxes, leave, and group benefits. This is the case for all the employees on the payroll. The fringe line here will have total payroll taxes, leave, and group benefit costs for our employees. The next two lines are overhead, again split into labor and non-labor because the labor line will have fringe benefit costs associated with it. These lines are for support costs of the technical work you do, costs that can't be charged to a specific contract, but that benefit multiple contracts, such as training classes, to improve overall company skills. This last grouping of indirect costs is called the G&A section. G&A stands for General Administrative, which is corporate cost or the cost of running the business itself, again, split into labor and non-labor. The next line on the income statement is called the gross margin. This is the amount of money built into each contract after direct cost and indirect cost are deducted. In preparing bids for government work, this is the fee or profit built into the contract pricing. For most government contractors, the fee or profit built into the pricing for federal work is in the 6 to 8% range. The actual amount earned will depend on the type of contract and how well costs are managed over time, and that is the amount earned on the gross margin line. The last group of costs on the income statement are listed as unallowable costs. This doesn't mean we're allowed to spend this money. It just means that when we create proposals for government work, these costs should not be included when calculating the bid rates. Examples of unallowable costs are interest expense, contributions, entertainment, etc. These costs could also be called non-billable or non-reimbursable. But they're still tax-deductible business expenses. You just can't pass those costs along to the government. They'll come out of company profits. The line for net income is your company profit. That's what they call the bottom line. In this example, it's the gross margin earned minus the unallowable cost.